So I'm just curious why you're so bullish on buying gold now. If you don't expect them to raise rates, wouldn't you wait until, later on, once they're pulling everyone into the markets with real estate and stocks, and then you would just load up on gold? So can you just explain that?
Well, I'm not just buying gold. I mean, I'm buying real assets all over the world. I want to get out of paper and I want to own real businesses, real resources. I want companies that can pay me dividends and that can increase my dividends as my cost of living goes up. And so I'm not just, putting everything in gold, but I'm not buying gold. And I'm also investing in mining stocks, which I think are extremely cheap as businesses right now. I think the fundamentals are fantastic. The valuations are historically low. These companies have great earnings. The earnings are growing. Their dividends are going up. There's not a lot of companies that are in such good financial positions and have such bright outlooks as the mining sector.
I agree.
Yet, it's still very cheap. And so I want to be invested in this area. Look, inflation, if you want to really boil it down and look at it, number one, it's a tax, right? It's the way a government taxes people without having to officially tax them. Instead of taking your money in a way that you can see it and you're annoyed about it, they just take your purchasing power by printing money. And so that means the money you have buys less stuff. And so the less stuff, or the reduction in what you can buy, is effectively a tax. The same way as, I could buy less if the government takes my money. I can buy less if they take my purchasing power. But the other thing about inflation is it really represents a transfer of wealth from creditors to debtors, right? So people who are owed money suffer a loss because they're repaid with money that has less value than the money they loaned. And it's a windfall for the borrower, the people who are in debt, because they get to repay their debts in money that has less value than the money that they originally borrowed, right? And the interest rates that they're paying don't adequately compensate the lender for the loss, because the interest rates were negotiated when everybody thought that wasn't going to be inflation. And so there wasn't a big inflation premium built into the rates. And so I want to own companies that have real assets that have debt, right? There's very few companies that have zero debt on their balance sheet. So if you own a corporation and that corporation has real assets and it's borrowed some money to accumulate those assets, if there's a lot of inflation, basically it ends up getting those assets almost for free, because it pays off its loans with cheap money.
Yeah.
And so I want to be a debtor. I want to own real assets. I don't want to be a lender. See, during deflation, right, if there's deflation and money becomes more valuable and real estate prices crash, that's when you want to be a debtor, because you end up getting everything. Even if the company that you loan money to can't pay you back, you foreclose and you take all their stuff, right? You get everything that they have. The common shareholder gets wiped out in deflation, and the bondholders get all the assets. And even if at the time it doesn't make them whole, in the long run they may be better off because they got a great deal on the foreclosure of a company. But this is not what's going to happen. And the main reason is, who is in charge of inflation? Government, right? And the governments around the world are the biggest debtors in the world. So inflation benefits debtors, and the government decides if it's going to be inflation or deflation because they own the presses. And so obviously the governments are going to create inflation. That's obvious. And so you want to be positioned to benefit from that. So that's what I'm doing. And what the advice that you're giving your clients now, this is exactly what they should be doing. And I don't know if you're advising them on who to help them, but that's where I come in, right? Because I can help people access foreign markets, but more importantly, I can manage portfolios for you all around the world. So if you're not familiar with all the various stocks that trade in various countries that you don't know too much about, we build portfolios of companies that are going to do very well in this inflationary environment that I envision, but more importantly, in an environment after the dollar is no longer the reserve currency. The world is going to look very different when Americans can no longer live beyond their means. So those companies around the world that depend on America are not going to do as well as companies that have customers in, let's say, emerging markets, where those people are going to be a lot richer.
Yeah,
those customers
definitely
cash to buy stuff. Americans are broke. Only reason Americans can buy stuff now is because it's on credit and we can print money. But when the dollar crashes, that gravy train is over and Americans aren't going to be consuming anymore. But the world is still going to be producing. The difference is it's not going to be Americans who enjoy the production. It's going to be people in other countries that are going to consume what is produced. And so I want companies that will benefit from that. I want to be invested in currencies in countries that are going to gain what America loses. Because the world, you look at currencies as a way to allocate what's produced. And if you have a strong currency, you can claim a larger share of the world's output. Even if you yourself didn't produce it, your strong currency enables you to buy it. But if the dollar crashes, it's crashing relative to other currencies. So the purchasing power that Americans lose, somebody else gains it. And so what's going to happen is, you look like a lot of people in China, they're working in these factories and they're producing goods that they can't afford, and they watch them get shipped to America. Well, what's going to happen in the future is that the Chinese workers in those factories are going to produce the stuff and then they're going to buy it, because all of a sudden their salaries are going to be worth a lot more. And now they'll be able to afford the goods that they used to ship to America, and Americans are going to be left with nothing.
Yeah. And asking you that question, I'm actually heavy in gold and silver. It's about 40% of my portfolio. But I just wanted to get your opinion, because I see that a lot. A lot of people say, well, Peter Schiff says this, but it's contrary to the interest rate. So why does he say gold and all that? So I wanted to get that question asked, because I see it all the time, people saying that. So next
also,
question.
You got to,
Go ahead, Peter.
Also, the other thing with interest rates is people see interest rates going up and they think that's bad for gold, right? Bond yields have been rising, but real yields are still negative. And so negative real yields are bullish for gold. It doesn't matter if those negative real yields have gotten slightly less negative. But in reality, I think that the real yields are actually more negative now than they were before bond yields started to move up. Because I think the acceleration in inflation, or at least because prices, is proceeding more rapidly than the rise in bond yields.